Utilities up 18%. Payroll drifting for 3 months. Occupancy quietly slipping below your lender covenant threshold. One operator caught it in minutes. The other caught it at year end. Same data, very different outcomes. Today we are breaking down exactly how AI catches the anomalies, hiding in your monthly operating statements before they become expensive surprises. The problem is never that anomalies exist. Every portfolio has variance. The problem is they hide in plain sight until they become expensive surprises. That is the gap AI closes. There are 3 anomaly types that consistently catch operators off guard. Third, occupancy drift that slips below lender covenant thresholds before anyone runs the numbers. Second, payroll creep across multiple properties, each one just slightly over budget, adding up to tens of thousands quarterly. And the number 1 most expensive blind spot, utilities spikes, burst irrigation lines, HVAC failures, water leaks, running undetected for 60 to 90 days while your NOI bleeds out. Let's walk through the solutions, from zero cost to institutional grade, so you can find the right fit for your portfolio today. You do not need a paid platform to start catching anomalies today. If your operating statements are in Excel or CSV format, paste the data directly into ChatGPT with a prompt like this one. A property manager running a 120-unit apartment complex in Atlanta used exactly this approach. She caught a water utility spike in July that traced back to a burst irrigation line, saving thousands in undetected waste. The limitation is scale. ChatGPT requires manual data entry and offers no automated monitoring. But as a zero-cost starting point, nothing beats it. Here is the reality for growing funds. Manual statement review at 15 or more assets captures less than half the anomalies that automated tools catch. The rest slip through. Once your portfolio grows beyond a handful of assets, manual analysis becomes impractical. APRS AI is built specifically for real estate financial modeling in Excel. It understands rent rolls, expense ratios, and operating statements natively. For a value-add fund managing 15 to 30 properties, APRS AI reviews each asset's monthly statement and surfaces deviations across the entire portfolio in minutes. Your team gets an automated flag the moment payroll at any property exceeds budget by more than 8%, or when utility costs are trending 15% above comparable months from the prior year. Let's compare these approaches directly so you can see where each one fits your operation. For institutional operators and larger funds, the stakes are higher and the tools need to match. For institutional operators managing large multifamily portfolios, Rentana delivers AI-powered analytics built specifically for real estate investors. Consider a private equity fund with 40 communities across 3 markets. Rentana benchmarks occupancy performance property by property and alerts the team the moment one asset dips below the portfolio average by a meaningful margin. The platform's anomaly detection does not just look backward at what happened. It shows you where performance is drifting before it becomes a crisis, giving your asset management team lead time to intervene. House Canary adds a critical layer for funds doing quarterly portfolio reviews. The flow starts with an anomaly flagged in your operating statements, say a sustained occupancy drop at a suburban office property. House Canary connects that operational signal to its market-level demand data, runs a valuation impact assessment, and delivers a risk summary ready for your LP report or refinance prep. It closes the loop between what is happening at the asset level and what it means for portfolio value. The business case is straightforward. Operators using AI for operating statement review report catching anomalies up to 70% faster, and the average undetected utilities spike costs over $12,000 before it surfaces manually. Here is how a practical implementation rolls out. You start in week 1 with a ChatGPT pilot on your most complex asset. Just paste in 12 months of statements and run the anomaly prompt. By week 3, you have identified your highest risk monitoring gaps across the portfolio. In month 2, you deploy a purpose-built tool like APRS AI or Rentana depending on your scale. And by month 3, your team has automated alerts running on every asset, no more surprises at quarterly review. A few practical guidelines as you build this workflow. Do start with your highest risk assets first, not your entire portfolio. Do set specific variance thresholds. 8 to 10% is a strong starting point. Do connect anomaly alerts directly to your asset management team's inbox. On the other side, do not wait until quarterly review to run your first AI analysis. Do not ignore a flagged anomaly just because it looks small. And do not skip the step of reviewing AI outputs before escalating to your lenders or LPs. If you're ready to stop finding expensive surprises at year-end, here's exactly where to start. Every anomaly your operating statements hide is costing you money right now. Whether you manage 5 assets or 50, there is a solution at the right price point to start catching those variances automatically. Book a free 15-minute AI audit, and we will walk through your current operating statement review process, identify your highest risk blind spots, and map out a practical implementation plan built around your portfolio. The cost of not knowing is always higher than the cost of finding out. Subscribe to stay ahead of how AI is changing real estate asset management. New deep dives every week.